Hi guys, welcome back to Compounding Everything. My name's Chris, and this is the channel that discusses all things investing, finance, and business. If you're interested in learning more about growing a long-term successful portfolio, click that subscribe button and press the little notification bell next to it so you can stay up to date on all of our most recent videos. Guys, in this video, we're going to be talking about the greatest investor of all time, none other than Warren Buffett himself. We're going to cover his 10 largest public holdings and a few other interesting details. So stick around. Now, it is important for me to mention here, I don't recommend copying Warren Buffett's portfolio. Everybody has individual needs, investment goals, and risk tolerances. You should do your research and understand your personal parameters before making any investments at all. You should also seek advice from your financial advisor. Before we go into the top 10 listed public holdings of Warren Buffett, or more accurately Berkshire Hathaway, keep in mind that he also holds a remarkably large amount of private companies wholly. I'll actually cover these companies in more detail in a future video. However, in this video, we're going to focus on the publicly listed companies of Berkshire Hathaway, mainly the largest 10. What is so incredible about Berkshire's portfolio is not only does it have over $200 billion in ownership of publicly listed companies, it is also currently sitting on roughly $130 billion cash, which we'll be breaking down a little later in this video. So to kick things off, we're going to start with the 10th largest holding. That company is the Bank of New York Mellon. Berkshire started to increase their holdings in this company in late 2010, previously having owned roughly 2 million units. However, they now own a staggering 88 million shares in the company, resulting in a total stake of 9.8% worth over $3.2 billion. However, as recent as last month, Buffett has actually sold down some of his position in the Bank of New York Mellon. He previously owned over a 10% stake. Now, of course, we can only speculate why Buffett would sell down his position. However, the most logical explanation is that he was trying to lower his total stake to an amount under 10%, which loosens his regulatory reporting requirements. Number 9 on our list is US Bancorp. You'll notice one consistency throughout this top 10 list. 5 of them are in the banking and financial sector. Berkshire currently owns 150 million units of US Bancorp, netting them an estimated 10% stake in the company worth over $5.5 billion. The stock does currently sit at a 5-year low. However, there is some benefit in that, where it is now returning nearly a 4% dividend yield, which has sparked rumors that Buffett may indeed be purchasing more throughout this period. Only time will tell. Coming in at number 8, we have the one and only JP Morgan Chase. Buffett has not been shy over the years in praising the chairman Jamie Dimon's remarkable efforts in leading this company. Currently, Berkshire owns 60 million units, giving them a 2% stake in the company worth over $5.7 billion. Like US Bancorp, it has been heavily rumored that Buffett may be buying more JP Morgan at this time, which wouldn't surprise me considering his love for the sector and praise for Jamie. Not to be outdone by number 7, we have Moody's Corporation. Buffett and Moody's have had an eventful relationship over the years, landing him in court in 2010 to testify for their involvement in the 2008 financial crisis. Since that point, it's not surprising that Buffett has actually sold some of his Moody's position over the years. He once held just short of 50 million units, which at today's prices would be worth a staggering $12.5 billion. However, at this point, he owns 24 million shares, netting him a 13% stake in the company worth just over $6.2 billion. In at number 6, we have one of the most controversial positions currently owned by Berkshire Hathaway. That is none other than Kraft Heinz themselves. Just 2 short years ago, this position was worth over 3 times its current value. Buffett is actually on record saying, "I was wrong in a couple of ways on Kraft Heinz. We definitely overpaid for the stock." He's also said that he has absolutely no intention at all in adding or subtracting to the stake that Berkshire owns in Kraft Heinz, saying that the company has a very strong brand and that he would be happy to own it a decade from now. At this point, Berkshire owns 325 million units in Kraft Heinz, resulting in a 26% stake in the company worth just over $9 billion. For those counting, yes, that was worth $30 billion just 2 years ago. Yes, the Oracle of Omaha is $2,000 million down on a position and still holding strong. And look, it doesn't really surprise me at all. Like I said, he loves the brand and it is still a strongly performing company. He just happened to miscalculate the purchase price and pay too much. Now that brings us to the top 5. Just creeping in above Kraft Heinz is Wells Fargo. Buffett has actually held this position for a very long time, making his first investment in the company in 1989. However, of late, Buffett seems to have lost some of his belief in the company. The reason I think for the continued selling looks to be a lack of trust in Wells Fargo, which was actually the result of a fake account scandal that saw 3.5 million unauthorized accounts created. You guys probably remember at the time, this was quite a big deal. At one point, Berkshire actually owned 379 million shares. Now the position has been sold down to 345 million shares, resulting in an 8.5% stake in the company worth just short of $10 billion. Most aren't aware that the fourth largest holding in Berkshire's portfolio, American Express, was the brainchild of Wells Fargo founders Henry Wells and William Fargo. In 1963, American Express was actually in the middle of a serious scandal that nearly wiped out the entire futures and commodities markets. The scandal originated from Tino DeAngelis, a wealthy commodities trader who bought and sold vegetable oil futures that were backed by American Express. On November 22, 1963, authorities discovered that the barrels he was shipping actually contained mostly water instead of vegetable oil. This caused a huge decline for futures markets, dragging down American Express shares with it. When Buffett actually saw the news, his instincts were to ignore the temporary scandal and use it as an opportunity to invest in a great company. Currently, Buffett owns just over 151 million units in American Express, resulting in an 18% stake worth $13 billion. Considering Buffett's entry point in 1963, this would have to be one of his greatest investments when it comes to percentage gains over a 50-year period. Coming in at number 3 is the one and only Coca-Cola. For those of you that have followed Buffett, you'll know that on his desk in almost every interview or AGM, he has a bottle of Coke. This company represents everything Buffett believes in as the perfect investment. I don't blame him. Buffett first started buying shares of Coca-Cola in 1988, not long after the famous Black Monday stock market crash in 87. By the end of 1989, he had purchased over 23 million shares worth a staggering $1.8 billion at the time. Berkshire's book value in 1989 was $4.9 billion, which means Coke actually comprised of more than 20% of Berkshire's net assets at the time. He added to Berkshire's holdings in Coca-Cola in 1994, bringing its ownership up to 100 million shares at the time. In saying that, Buffett has never actually sold a single share of Coca-Cola. The stock has split 2 times since 1994, bringing Berkshire's ownership up to 400 million shares. Of course, since the end of 1988, Coke stock has climbed over 1,750%. Currently, Berkshire's 400 million shares are worth just over $18 billion with a total stake in the company of 9.3%. Now, reaping the benefits of his original Coke investment doesn't just stop there. At Coke's current quarterly payout of 40 cents per share, Berkshire's 400 million shares will bring in 640 million over the next year. Since 1995, he has earned $7 billion in dividends from the Coke investment. That is $7,000 million. That is what I call a good investment. Coming in just above Coke in second position is the Bank of America Corp. Having only entered this position in 2011, it is a relatively new position for Berkshire. Buffett struck a deal 9 years ago to invest $5 billion for preferred stock and warrants. At the time was to help lift confidence in the lender as it faced losses tied to the subprime mortgage crisis. In 2017, Buffett ended up swapping those preferred shares for a $16 billion common stock hold. This is now resulting in ownership of nearly 950 million units worth $22 billion, landing them a stake just over 10% in the company. Buffett is quoted on record in saying he doesn't have any plans to sell Bank of America anytime soon. So in saying that, here's number one, which is you smashing that like button. Okay, I know that was a little cheap, but I mean, you can do it. It helps me ride the beast that is the YouTube algorithm. So this actually brings us to the largest publicly listed holding of Warren Buffett, or technically speaking, Berkshire Hathaway. That holding is none other than Apple. Buffett actually told CNBC that he doesn't consider Apple to be a stock. He thinks of it more as his third business. Now, in saying that, some of you might actually be interested in knowing what those top 2 businesses would be if Apple is third. Well, like I said, in a future video, I'm going to discuss Berkshire Hathaway's largest wholly owned private subsidiaries. So if you're interested in that video, don't forget to tap that subscribe button so you can get a notification when I release it. Now, the compliments didn't actually end there for Apple. Buffett is quoted saying that Apple is probably the best business he knows in the world. That's right, Warren Buffett himself calls Apple the best business in the world. That really isn't to be taken lightly at all. Buffett has also said, like most of us, he wishes he bought Apple long before he did, and that he should have appreciated it earlier. So why does Buffett actually love Apple so much? Well, I think it can come down to Buffett's fundamental beliefs in long-term investing. It has long-term consistent growth via earnings per share. It has a competitive advantage, or what he likes to call a moat. It's also in a great position to pay down debt. In fact, Apple has $93 billion worth of debt and an annual earnings of $56 billion. That means it could pay down its own debt in less than 2 years, which is incredible for a company of its size. Not only that, Apple has a unique ability to generate cash via its free cash flow of approximately $9.63 per share. That means Apple is making nearly $10 more per share than it's spending, which is obviously an incredible achievement. Another favorable sign is that Apple loves to put their money where their mouth is, via share buybacks. Not only is that a signal that Apple sees its company's stock as undervalued, it also shows shareholders that they're right in putting their money into that stock. Berkshire currently own an incredible 250 million shares in Apple, resulting in a stake of just under $70 billion, landing them 5.7% ownership in the company, which is really a mind-boggling amount of money. The 10 largest positions we just covered in Berkshire Hathaway's publicly listed portfolio currently hold a value of $165 billion. However, keep in mind there are still 42 publicly listed holdings remaining, making up another $31 billion in their portfolio. So we've covered Berkshire's largest public holdings, but there are 2 amounts worth mentioning. The first is Berkshire's private holdings. Companies like Geico, Duracell, Dairy Queen, BNSF Railway Company, and NetJets, just to name a few. Like I said, I will be putting together a dedicated video covering the entire list in the near future. Currently, however, it's estimated these private holdings account for roughly $150 to $250 billion worth of value in the Berkshire portfolio. Not only does Berkshire have an incredible portfolio of private companies and publicly listed companies, it also has a cash position of nearly $130 billion, which is an incredible amount of capital to have sitting on the sidelines. Buffett has mentioned that $20 billion of this amount will never be touched due to cash requirements within some of his companies, mainly due to insurance commitments. With that aside, $110 billion is still a substantial amount of cash to have on the sidelines. So why is it that the man famous for not timing the market and such a large advocate for having your money invested has so much on the sidelines? I personally think this can probably come down to 2 factors. The first is a lack of true value in the market. Buffett has been quoted many times in the past couple of years saying that the market does appear to be somewhat expensive. He's also mentioned that if the opportunity came along, he'd be more than happy to purchase that elephant company. The second factor, which would be a nice one for the rest of us to have, that Buffett finds increasingly difficult to manage, is to find ways to spend such large amounts of capital in any meaningful way, gaining any meaningful returns. During a shareholders meeting way back in 1999, Warren Buffett suggested that he could generate 50% returns if only he had less money to invest. He couldn't compound 100 million or 1 billion at a 50% rate, and that's mainly because the smaller, faster growing companies typically offer the highest returns. For example, if Buffett invested $240 million in a company and its value doubled, the impact would increase Berkshire Hathaway's portfolio by just 0.3%. Considering the amount of research involved, it just may not be worth his while. So there you have it, guys. That is the Cliff Note version of Warren Buffett's Berkshire portfolio and his top 10 holdings. I really hope you enjoyed this video. If you did, please press the like button. It really helps me out in taming the beast that is the YouTube algorithm. And of course, don't forget to subscribe and press the notification bell so you can stay up to date on our weekly video releases. Thanks again. I appreciate your time, and I'll see you guys soon.